Hello, congratulations for making it thus far in the lesson. This is the final lesson. Just right after this, you should be ready to, become a professional, or maybe you should just be ready to start crypto trading because you would have learned all the basics. Okay, so let's get straight into it. In this lesson, I'll be teaching you how to actually execute trade positions, buy orders, sell orders, and how to set your stops and how to manage your trade position. So let's get straight into it. So you're going to be applying most of the risk management techniques that you were taught in the previous lesson. So let's get straight into it. So let's open a BTC short. Now, if we go to the chart, you can see that price has come into a brilliant level here. This is, look at the rejection. So price is now on that level. If you take your fib tool, then you plot from top to bottom, you'd see 78.6. This is our cue for entry. So I want to short this because I think this structure point is still valid. So price is merely just retracing to retest. So you have impulsive retracement. So probably price will still head back down. So I want to leverage on this bias. So I'm shorting here. So this is my entry. Now right here at the top is my stop loss. And you can see price is already pushing down. So I'm entering, it's an instant entry. So instant entry, that means you're entering at the current price, right where you find it. So let me head straight to the testnet to execute. So my position size is always 5% of my capital. So, but I want to open like 2 trades. I'm not going to use 5%. I'm using 2.5% because I'm opening 2 trades. So 2.5% of this is going to give me about $75, right? $75, about that range. So $75. So now that I have my risk amount, 75 multiplied by this, I'm going to be using the USDT denominator. I won't use BTC because this is harder, right? This is a faster way to calculate. So 75 multiplied by 25 would give you your position size. So 75 times 25 will give you your position size. So my position size is 1875. So that means I'm going to be risking $74 on this trade and I want to short. Just before I get into shorting, we have several types of orders. We have limit order, we have market order. The limit order here would allow you to set the price at which you want to buy or sell a cryptocurrency. So let's say you want to maybe sell at a later date, at a later price, sorry, you can set that. The market order here allows you to execute instantly at the market price. But when trading futures, you want to always use the limit order because sometimes there could be huge volatility in the market. And if you're using the market order, your entry price might not be favorable. So always use the limit order. So now that we have our position size, which is 1875, you can see that that's about $75. So we have that 185. So the next thing to do is to ensure that the price here is because it's a short trade. So the price here has to either be equal to this or lesser. So this is 2554. This is 2597. So you can execute. So I'm going to quickly click on sell short and order partially filled. So you look at this, the order has been executed, partially filled. So I'm still waiting for the order to get filled completely. So when you do that and you scroll down, you're going to see the position. So I'm just going to refresh this to be sure that the order is executed. Most times you'd have to always refresh due to network concerns, and generally the testnet usually has a lot of glitches. So it's not like a real account, so you don't expect 100% performance. So it's still the order executed partially. So it has not completely filled. So what I'll do is I'm going to partially fill. So it's still getting filled. Because when I executed, the price quickly moved. You see why limit order is good. The price quickly moved, so it's still getting filled. As price is recovering, we shorted at about 25. This is where we entered from. So this is the current price. So it's still getting filled. Let's see. So once it fills completely, the price, this margin will appear as $75. So it's a demo account. You just have to be patient sometimes. I believe if it spikes up one more time, then okay, it's coming up now. So it's now 50, you see, so it's completely filled. Sell order filled, so it's completely filled, and we have our sell order complete here. Okay, so that's our trade. Remember, we have our stops right here. This is our entry and this is our take profit. All right, so after executing the trade, so let's look at some key things on the trade. So this is our position size. You can see entry price 20,554. That's where we entered the trade. Our mark price, which is the current price. Then the liquidation price, very important. Look at this. Liquidation price is at 53,854. The reason why liquidation price is so far is because we are managing our risk well. So it will take, before this account will be blown, before you say that, okay, you have liquidated the account, that means BTC has to hit $53,000. And that's almost double the price of what it is now. And you know that that will take a whole lot for that to happen in the market. So it shows you that you're managing your risk well. Once your liquidation price is very far from your entry, it's a proof that you're managing your risk well. Of course, you're not going to allow BTC to hit 53K. You're going to set stops, right? So these are some of the denominators that you want to look at when you have executed your trade. This is your margin ratio, you see, 0.61%. Now, I don't know how correct this is. I don't think it's correct, but 0.61%. That means you're not even, what it's trying to say is that you're not risking up to 1% of your account. I don't know how correct this is, because I know we're risking more than 1%. But forget about the testnet. The most important thing is that you're following your trade plan. The margin here is the amount you're risking, which is $74. Your ROE is the return on this margin, right? So closing all positions. If you click here, this trade is going to close instantly. Now, if you use the limit order here, then you can set where you want the trade to close. Right, so I'm going to come back to explain this for you. Now, after executing the trade, the first thing you want to do is to set your stops. Set your stop. You might not even set your take profit, but always set your stop. So how do you do that? If you slide this bar to the right, you're going to see TP and SL for your position. So if you click on it, it's going to open take profit, stop loss. It is so important. You might not set your take profit, but please set your stop loss. So let's go back to the trade. Our take profit, our stop loss was at around 2,700. So I'm going to set that. So stop loss 2,700. Our stop loss is at 2,700. Our stop loss here that we set 2,700. That's where we put as our stop loss. We're using this level of this swing here, this swing high, to set our stop loss. All right, so let's go back. So if you use that 2,700, once you impute it, it's going to show you how much you're going to lose automatically. So if you're putting your stops at 2,700, you're only going to lose $13, which is absolutely perfect. So when you confirm this, your stop loss success. So you can see it's been set. After a period of time, it's going to appear here. All right, so the next thing after you set your stop is to set your take profit. Remember, you want to take profit at 2,400, right on that level. So what you want to do is to go back and set your take profits. So your take profit is 2,400. So take profit 2,400, stop loss is 2,700. So you see, once you have done this, you as a trader, you clearly see what you're risking and what you're about to make. So this is a clear example of a 1:1 trade. You're risking $13 to make $14. The actual risk here is not what is on your margin. The actual risk is what you're going to lose. So this is how you judge your risk to reward. So you're going to be risking $13 for $14, which is 1:1. And it makes sense. So once you've achieved this, just click on confirm. And once you do that, probably the reason why it's the stop loss 2700 is supposed to appear, but the testnet is saying probably the stop loss is too close and there could be a spike. So an open stop or take profit with GTE and close position in direction is existing, so it could easily get triggered. So I'm just going to increase it to maybe $21,000. So let me just increase it. Okay, I'm going to leave that. The testnet is always having a lot of glitches, and I cannot use the real account to teach because I'll be losing money. But this is it. So you can set your stops right here. Don't mind the testnet account. So just set your stops at 2700. But once you do this, you'll be able to know exactly what you're going to lose and what you're risking. All right. So this is for the trade. Once you have done this, you can go and relax. The next thing is just to manage your trade position. Just manage your trade position as the time goes on. All right. So let's open another trade. This time around a long trade, and I'm going to use ETH. So how do you execute longs? I've executed a short for you. How do you execute longs? It's the same thing. Know what you're risking. So we want to risk another $75. This time around with Ethereum. So our risk amount is 75 multiplied by the leverage. 75 multiplied by 25 is the same thing. 1875. So you see, once you type it in, it gives you exactly what you want. Now to execute the trade, this is 121. This is 130. So we're executing a long. Now when you're executing a long, the price here has to be either equal to this or higher. So you have to edit this and make it let's say 135. So 135, 130. So you can execute. So buy long and order field. So limit order field. So you can see once you do that, you scroll down, the trade has executed. You see, so we're going long. The margin is what you're risking, $75 point this. So if you go back to your chart, here on your chart, you want to come here and find reasons why you are executing the trade on your chart. So I'm going to take this away and assume that we're going long right here, even though it doesn't look good. So if we're going long in this area, here, so let's say we're going long here. So you take out your long tool and execute. So what are you targeting? Probably this level here. And where do you want to set your stops? Maybe you want to set your stops here, right? So we're targeting this move back to the upside. That's what we're trying to do from that level. Okay, so where do you have your stops? 1137. Where do you have your entry? 1151. So it's an instant execution. There you have your take profit at 1191. So let's go back to the account to impute that. So you click on this sign here. What's your stop loss? Remember, your stop loss here is at this swing low. That's a swing low. That's where you have your stops. So this is how you also line up your stops on a normal day. So you don't always have to wait for someone to tell you where to put your stops. Once you understand your chart, you know that your stops should be at the swing low. So you set your stops here. You can round this to maybe 1130, just so that price can have enough room to breathe. 1130. That's where we want to set our stop. And our take profit would be at, let's say, 1190. All right. So we set that. Here. The mark price is at 150. I don't know why the testnet is making a lot of glitches right here. But if you set your take profit 1190, just follow the lesson. 1190. This is where you set your stops. So you just impute your stops at 1130. It's saying that you're not going to lose anything. So let me try a lower. Okay, so let's assume it's 120 we're using. So 120, you're going to be losing $16 for $99. So it looks like a good risk to reward plan. So if you're risking $16 for $99, it's a good one. So you can confirm this, and that's going to appear. So you see it has appeared here. 190, 120. You have to wait for this to appear. Very important. Absolutely important. You have to wait for this to appear. So once that is set, then you're ready for your trade. Okay, so there are basically three proponents: your entry, right? Your entry price, your take profit, your stop loss, and your liquidation price. So when you have all of that sorted, your liquidation price here is showing dash. That's because right now the broker cannot calculate what it will take for you to lose, to blow your account. So if you channel your trade such that you have a liquidation price placed at dash, that means it's almost impossible to blow that account, because before price would even get to the point where the exchange can calculate, you would have set your stops. So if you can line up your trade such that it shows dash, then it's a great advantage for you in a way of safeguarding your accounts from risk. All right. So liquidation price, and this is all you need to do. You have your stop set and you have your take profit set. The most important is your stop, because in trading, you are told to manage your position as it occurs. For example, you don't have to wait for this trade to hit this point to take profit. You're getting my point? So you can take profit halfway. You can take profit when it hits here. So, but the most important is your stop loss. All right. So let's revert to the BTC trade. The BTC trade looks like it's in profit. So if you look at the BTC trade that we executed, it looks like it's in profit. So when your trades go into profit, what do? You can manage your position by moving your stops to profit. So I'm going to show you how to do that with an existing trade that I have. I'd usually say on the group, take profit, move your stops to profit. So look at this trade. This trade is still running, right? So we're probably targeting 20K with this trade, for example. So I'm going to draw a quick example from a real account and show you now. So this trade is still running. Let me expand this. It's still running, but the trade is in advanced profit. And I know that, the trade may likely hit 20K, because everything in trading is probability. There's no certainty. It can happen, it might not happen. No matter how good someone is, it can happen, it might not happen. So it's all a probability. It's a game of probability. So I'm still expecting this to hit 20K. But I entered here and my trade is already in profit. What do? I usually say secure a percentage of profit and move your stops to break even or to profit. So when you move your stops, that means there's no risk anymore. If the trade comes back, it's going to stop you out in profit. So that's what it means to, graphically, this is what it means to move your stops, to get rid of the risk area. So when you move your stop, that means you're taking your stops from a risk area that you would have made a loss to an area where there is profit. So you totally eliminate the risk in the trade. So let me show you how to do it. Now, this is a trade that is currently running, and this trade is in profit. You can see that this is 592%. This is 297%. The trade is in huge profit. And I know the trade might still deliver more profit. So what do? Now, I've already taken, quite a chunk of profit of the trade. If you look at the transaction history here, the trade history, you're going to see it. So it's saying anomaly. So okay, so I'll leave that. It's network. So, but what I want to show you is when your trade has moved into advanced profit, especially when your trade has hit that 1:1 threshold, what you want to do is to move your stops to profit. So you can either choose to close a percentage. How do you close a percentage? Use the limit order. Use this part of the screen. So if you click here, you see percentages. So you can say, okay, I want to secure 50%. First. I want to secure 50% profit first of this position. So once you click here, you click on 50. That 50% is showing 0.391. That's 50% of your position size. The position size is 733. So 319 is 50% of this. So you have that. The next thing is to set the price. So all you have to do is set the price to this, right? So you can adjust. Okay, this is Ethereum. So you need to use the Ethereum chart to do that. So set the price to the current price. So if you wanted to close, this trade is already in profit, just like I was laying a foundation. We have profit of $215, right? So I was using the Ethereum trade. So all you have to do is, if you wanted to close a percentage because your trade is in profit, push this to 50%. Now set the price to the current price. So this is 1154. The current price is 1153. So it's going to execute. So you can set this, just set this to maybe 1152. So once you do that and you click on limit, the trade will automatically execute and it will close 50%. Now, when that happens, you can now move your stops to profit. Remember, the initial stops on the trade was around 1230. Now, at 1230, you are going to lose $9. So when you say move your stops to profit, it means that you should move your stops, below your entry, because below your entry is profit. Okay, above your entry is loss. So move your stops below your entry. So at this point, you can move your stops to 1,200. That way, even if the trade comes back, it's going to take you out in profit. So you move your stops from an area of risk that it was to an area of profit. The green area is always your area of reward, which is your area of profit. So you always want to move your trades into profit. So once you move your stops like that into profit, you see that this automatically turns to profit. So this is how you can manage a winning position. When you have trades that you're already in advanced profit, there is no need to try to jump in and jump out of trade positions. Manage the trade position by closing a percentage. Even for BTC right here, BTC trade is up about 600%. So I can manage the position by, closing 50% of the position instead of opening a new trade, opening a new trade, which might run you into trouble. What you can do is to manage the trade position. Close a percentage, 50%, 70%, as the case may be. However you think you should manage it, because this is left to your own personal discretion. If you ask me, I would say always stay within 50 to 75%. Always secure 50 to 75% of your profit. Profit is always very difficult to come by. So when you see it, don't play. Always secure something. So once you've chosen the required percentage that you think is okay, all you have to do is set this price here to the current price. So this is 1143. If you click limit now, it's not going to sell because the price is higher. So you can set this to maybe 1142. So something a little bit lower than this. Then you click on limit and it's going to execute. If you want to close the entire position, just click on market. Market would close the entire position, right? But the limit order would allow you to sell, a portion, or to even sell everything, right? So the difference between market and limit is always the fact that market allows you to execute at the market price. It's an instant entry, while the limit order allows you the freedom of choosing when you want to sell, the portion that you want to sell. All right, so this can be applied on any coin. So I've done it on Ethereum and on BTC. I'd like you to go ahead and apply this on a wide range of coins. Apply the risk management lessons on a wide range of coins, and you would see that it's the same thing. All right, just before I wrap this up, I'd like to show you the calculator. It's very important. It's one tool that a lot of people ignore, but it's very good. This right here is your trade calculator. Now, this can help you to manage your risk to a great degree. So how can you go about this? Now, before you even execute a trade, you can see how much you can make or how much you're going to lose in that trade. For example, this is for P&L, that's your profit or loss. This is to know your liquidation price and so on and so forth. The two most important things that people really always want to find out is the profit and most likely their liquidation price, because these are the highest, these are like the most important factors in your trading. So P&L. So let's say I want to find out how much I'd make or how much I'd lose in a particular trade. So I'm going to use a real-time example to explain this. So look at this. Using a real-time example to explain this. That's a massive spike there. To take out people. So let's say I want to execute this trade here. Let's say I want to execute this trade here. And I'm setting my stops to that swing high. Let's say I want to do that. Okay. So I want to execute that trade and I want to take profits around 20k. This is where I want to set profits at around 20k. Okay, I want to set profit there. So I can calculate this before executing the trade. I can calculate how much I'm going to make using the calculator. So how do I do this? All you need are your entries, your take profits, your entry point, your take profit and your stop loss. So our entry is the current price, 20,482. Our take profit is 20k. Our stop loss is 20,800. So let's go and apply that on the calculator. So right here, we're going for a short trade. So what's your entry? Our entry is, let's say 2,500. Let's round it up. Our exit price is to determine, let's determine the loss first, because that's what you should think of. What will I lose first before what you make? So let's determine the loss. So in determining the loss, you're going to use your stop loss as the exit price here. So our stop loss on the trade is 2796. Let's assume it's 2,800. So stop loss 2,800. Now the position size, the quantity here is your position size. So usually you're risking $75 per trade if you're going to be taking two trades. If you're taking one trade, then you can risk the entire 5%. So remember, our risk is always $150 for the entire trade. But if you're going to take two trades, you have to split it. If you're going to take three trades, you have to split it across. So this is one trade, so we're going to use $150. So our quantity as usual is 150 multiplied by the leverage. This is 20x. So that's 300. So 300. Now if you click on calculate, it's going to show you your loss. Right? Your margin is 20. This is 20x multiplied by 150. That should be 3,000. My mistake. Okay, so see that. So we're risking $149. Look at your risk. Your margin is always your risk. And you're going to lose $43. The percentage loss is 29%. This is what you're going to lose. Now, if you change this to your take profit price, it will show you how much you will make. You see, you're going to make $73. So that means you're risking $43 for $73. Now, this tool will help you calculate ahead of time, even before you execute the trade. Before you're close to executing the trade. So you always want to, especially when you're doing your analysis and you're envisaging a trade ahead of time, you might want to use the trade calculator to gauge your entry, your take profit, your stop loss, and the rest. If you also wanted to find out your liquidation price, because liquidation price is also very important, you want to be sure that the broker is going to give you enough room to trade, because crypto spikes a lot and you need ample room to be able to execute your trades. So on the trade calculator, you can also check for your liquidation price and you can determine the leverage mode. So this is cross. We're using cross here. All right. So this is 20x. The same thing. What's your entry price? Our entry is 2,500. Our stop loss is the quantity here. When you're determining the quantity, how much are you risking in the trade? Now, remember, this is a $500 account. I'm using a real account to illustrate this. This is a $500 account. So I'm going to stay within the ambit of our 5%. So 5% of $500 is $25. So I'm going to calculate using $25. So 25 multiplied by 20. This is the balance. It's a $500 account. You can see it here. So the balance is 439. If you're using, I don't want to use the testnet. The testnet is having a lot of glitches. So I'm using a real account. You can see the web address has changed. It's no longer testnet. This is testnet. And this is a real account. There's too much glitch on the testnet. And it's affecting the lesson. So that's why I'm using this. Now this is a $500 account. It's a small account. So the quantity here, I'm going to stick to the 5% rule. So 25 multiplied by 20 will give us 500. So if you calculate, it's going to give you the liquidation price. The liquidation price here is at $119. Now that is good because the current price of Ethereum is 1,145. So if you're giving me a liquidation price at 119, that's enough room for me to trade. So it's going to be extremely difficult for me to blow my account because the liquidation price is far. But most people would line up their trades such that their liquidation price is very close to their entry or the mark price, right? When you have, let's say you have if I increase this, the more you increase the quantity, the closer your liquidation price, or the greater the risk of you getting liquidated. So if I increase this to, let's say, some people, they have $500 in their account and they want to risk $200. So let's increase and let's see. Let's say you increase this to 2,000, right? So 2,000 here. Let's say you want to risk $100, right? $100 here, 100. So 100 times 20 is 2,000 because you use always your risk multiplied by the leverage. So if you calculate the liquidation price here is 15,500. This is actually for BTC. You see, it gets closer. 15,500. The current price of BTC is 2,400. Look at this. This is the current price, and the broker is giving you a liquidation at 15,500. That means there's a greater risk of liquidation. Now, imagine if you increase this to 3,000. 3,000. So the higher the risk, the greater the higher you increase the risk amount, the greater the risk of liquidation. The lower the risk amount, the lower the risk of liquidation. So you can always calculate by imputing your entry, the quantity, and the broker will detect the balance and you can calculate your liquidation price. What I want to advise you is make sure your liquidation price is very far from the mark price. The mark price is the current price. You always want to ensure that whatever trade you're taking, the liquidation price is absolutely quite a distance from the mark price. Once you're able to impute this, if you stay within the 5% threshold, you'll never have to calculate liquidation price because your liquidation price will always give you enough room, and you also have stop loss. So the stop loss will be there to mitigate your losses. It's very important that you apply all of these principles, and you're going to have a very awesome trading experience. All right, so there's no other lesson, but I'm going to do a short tutorial on the mobile version because this is the web version. The mobile version is almost the same, just a little technicality. So I'm going to do a short 5 minutes video on how to execute trades on the mobile app, how to set stops, and all of that. So it's the same interface here, but just a little bit of a technicality when setting your stops. So I'm going to do that on the mobile app and I'll send it across. All right. So I'd like to congratulate you. And there's also a crypto checklist for you. So the checklist is supposed to guide you in your trading. Once again, I'd like to say huge congratulations to you for going through the course and coming to the end of it. I wish you a successful crypto trading journey. Thank you and I'll see you some other time. Take care.